Alright everyone, good evening. Today is March 2nd. Let's continue reviewing how the market is evolving. Last week, around 2060, we discussed opening short positions. Based on our strategy, those positions should have been closed around 2000, locking in profits. At this point, if we redraw the chart clearly, we can confirm that a defined consolidation range has formed. And within this range, the strategy is actually straightforward. Sell into strength. Remember, in this structure, it's about opening shorts at higher levels within the range. I won't go through the detailed reasoning again since we explained the logic almost every day last week. If you missed it, you can revisit those videos. From the current structure, the market has not yet entered an environment that supports a sustained rebound. It has not formed a solid bottoming condition. Price is still searching for a lower support level, and that process may take time. In fact, in a bear phase like this, there can still be an extended window to capture downside opportunities. Now, regarding Bitcoin during the weekend war headlines, it did partially act as a safe haven asset. The reaction wasn't extremely strong, but importantly, it held steady. It did not collapse as a high-risk asset that investors rushed to liquidate. In a way, it reminded the market of what it is. Looking forward in periods of escalating geopolitical tension, I believe Bitcoin can still function as a form of hedge. So when sudden black swan headlines appear, there may be short-term trading opportunities around that volatility. However, stepping back, the long-term trend of any asset is ultimately determined by capital flows. And capital flows are driven by confidence. Strong confidence drives buying. Weak confidence drives selling. Confidence itself is shaped by a complex mix of macro information, policy expectations, liquidity conditions, and broader narratives. Overall, my view remains consistent. Bitcoin is still one of the scarcest and most valuable assets in the world. There is no crypto will die thesis here. Today's performance, even amid geopolitical stress, reinforced its structural value rather than undermined it. Of course, personally, I still believe that from a medium-term perspective, the market has not fallen enough. Previously, we discussed potential downside targets, possibly 55,000 and possibly even lower into the zone marked by the blue line we drew earlier between 32,000 and 35,000. That area could provide support. As for the exact level within that range, we don't know. But between 32,000 and 35,000 is one key zone and 55,000 is another. None of these levels have been reached yet, so overall market sentiment remains relatively weak. Still relatively weak. Last week, we told everyone to short Ethereum around 2060. That was a very clean level, very clean. You should have captured profits there, right? After entry at that level, we said that once price pulled back, you move your stop loss lower. If it drops further, you move it down again. In the end, your final take profit might have been around 1974. Yesterday, into the close, price pushed higher again, in sync with US equities. After that rally around 2083, another short opportunity appeared. If you recognized it last night as a strong short setup, you could have entered short there with your stop loss placed at the high of that candle. The high of that candle is your stop loss. If you didn't enter, that's fine. You can skip this opportunity because the downside range may begin to compress, may begin to narrow. If it starts to contract like this, then the profit space becomes limited, not very large. In that case, it's perfectly fine to pass on the trade. So what do we wait for? We wait for price to challenge this high again or that high again, and if we see another upper wick, a clear sign of exhaustion, then you can decisively short again. In summary, the principle right now is simple: short on strength. You might ask, if this is a consolidation range, why not go long at the bottom? Why not buy the lows? As we've said before, our directional bias is determined by the broader environment, not by reacting to every short-term rally. Just because price moves up doesn't mean we must trade it. And just because in hindsight we see a rally and think, why didn't we buy there? The answer is simple: it does not align with the larger macro trend. Even if there is a sharp spike upward from here, we can only watch it. We wait until the move exhausts itself and then we short. There is a scenario where after consolidating here, price suddenly launches into a strong rally, even pushing toward previous resistance levels, maybe reaching those earlier pressure zones. That would be a large move. You may ask, don't we want to capture that? The answer is two words: don't trade it. Why? Because it does not align with current fundamentals, not with liquidity conditions, not with market confidence, not with the broader macro backdrop. Whether it's geopolitical tensions or monetary policy conditions, the environment does not support sustained upside. So we can only watch and short on strength. If it's a small range rally to a local top like this, we short. If it rises to this type of level, we short. The key is whether there is visible exhaustion at that level, signs that momentum is fading. That remains our overall strategy and directional bias at this stage. You might say you've explained so much, but I still don't fully understand. In reality, you only need to remember a few words: short on strength. I truly believe these 4 words are extremely helpful for you. When trading perpetuals or futures, the most important question is always direction. If your direction is correct, you can wait, you can hold, you can add to the position. There are many tactical adjustments you can make. But if your direction is wrong, the more you add, the worse it gets. The longer you wait, the worse it gets. The more you hold, the worse it gets. That's why I believe direction matters more than anything else, and right now the direction is clear: short on strength. As for where exactly is high and where to enter the short, that requires daily review. Follow the channel, we recap the market every day and look for solid setups to share. That's it for today's analysis. Remember to like and subscribe. See you tomorrow.